Good luck with the 75 basis point hike. It could happen, but if it happens, the losses will be even steeper. Look, we've seen this game before many times. We've seen everything collapsing. That includes stocks and bonds and cryptocurrencies and the metals. The only thing that is not collapsing is the dollar relative to other currencies. But it is collapsing in purchasing power.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And fortunately, it's nice that not only do we have Rafi back on the show, that's Rafi Farber of the Endgame Investor. Rafi, this is the first time we've had a conversation in quite a while, at least on the air, since you started doing your weekly Friday report, which I think people have really been enjoying. I've been enjoying, and personally, I think it makes the channel stronger when there are other opinions providing their own research aside from my own and even the conversations we have. So welcome on in. And first of all, thank you for the great reports you've been giving us every week. It's nice to see you again.
Good to see you too, Chris. It's a privilege to be on your channel.
Well, I sure appreciate that. And certainly there's a lot happening in the world. And I thought that would be fun to dig in with you today. We're recording on Thursday, so this may be a few days old before you see it. So we're looking at Thursday pricing, but a lot happening here. Looks like the stock markets, all of them down again now. Rafi, maybe we could start with the NASDAQ, which at 11,191, you see back up here in November. I think it got over 16,000. That's a pretty big drop now. And we hear that the Fed is thinking about going 75 basis points at the next meeting. And why don't you start there and what you see happening and how you see that playing out and what's going on?
Good luck with the 75 basis point hike. It could happen, but if it happens, the losses will be even steeper. Look, we've seen this game before many times. We've seen everything collapsing. That includes stocks and bonds and cryptocurrencies and the metals. The only thing that is not collapsing is the dollar relative to other currencies. But it is collapsing in purchasing power. So this is a classic liquidity crisis, and the fact that it's happening is no surprise at all. It's just a question of when. The bigger question is this the last one? Is this like the big liquidity crisis where the Fed finally pivots for the last time and decides to print money for one more time, and then what happens then pretty much is the dollar collapse that we're all anticipating, because they can't do this again. They can't do this again. They could do it in 2008 because that was money printing under the rug, and 2020 they were only able to do it because they shut the entire economy down.
Well, it makes a lot of sense. And on one hand, I'm inclined to agree when you think about the different key steps that have brought us here. It certainly would fit that the next time they start the presses again, that you would see some blowout moves. Of course, I've been surprised that they've kept things together as long as they have, so I always factor that in. Although, let's take a look at another market that amazingly is actually rallying the last couple of days, but you see the US 10-year even on Thursday rallying with the yield coming back in 9 basis points, but still quite a significant move, especially since the Fed said they were going to raise interest rates. We've seen the 10-year jump. We've seen mortgage rates jump, which, especially knowing what a big chunk of the American economy the housing and mortgage sector is, creates a lot of other problems that would lead to pressure and incentive to reverse course. What do you say there on the rates and mortgage rates, Rafi?
Yeah, on mortgage rates, this is the fastest rise, I think, month to month, or no, sorry, year over year mortgage rate increase ever for the 30-year. I think if you take a look at the Fred chart, I don't have it on my I don't have it ready to share, but think I saw it today, and I put it on the Endgame Investor today, that if you look at the year-over-year change in mortgage rates in the 30-year, it's the most ever in history. And the practical application of that, if you think about that, then people with adjustable rate mortgages, their monthly payments are going to be adjusted much higher, faster than has ever been repegged when mortgage rates are repegged, as they are in adjustable rates.
Yeah, that certainly makes a lot of sense, and it's hard to hard to know how much pain the Fed could take. We saw what happened when they took rates down to 1% for a year in 2004 and tried to raise them after that, and certainly a couple times since then. So agree with what you're saying, Rafi. Although here is another one I would like to get your comment on, which is the Bitcoin price. And let me pull that one up here, because after reaching as high as 60,000, you see it's been quite a decline. Yesterday was a big move down, and today down another 1,000, under 30,000 at 28,399. Rafi, any thoughts on what we're seeing in cryptos there?
Not necessarily what I thought. What I see in Bitcoin is the most interesting, but what is actually interesting about the crypto space right now is that stable coins seem to be becoming unstable or unglued a little bit. There was one stable coin that's based on some kind of algorithm with a little bit of backing of US dollars, and I think it was called Luna or something. And it collapsed to like 20 cents in the dollar. And we saw a dip in Tether, which is the most infamous stable coin, or famous, depending on what side of the divide you're on. And it dropped to, I think, about 90 cents for a while in the middle of the day. And what that means to me is that if it's true that tethers are being inflated over the dollar supply to bid on Bitcoin, and then the crypto public is kind of catching on to this and selling off the tethers, then that would in turn sell off Bitcoin. But it's the same inflationary mechanism. I'm not saying it's true, but if it is, and that's what's happening, then we're seeing some evidence of it. It's the same inflationary mechanism of inflating the dollar supply over the gold and silver supply, and then buying stocks with those dollars. It's the same game. So if it's true that tethers are being inflated, or stable coins generally are being inflated to bid on the cryptocurrencies to keep their prices up, then whatever happens to Bitcoin, if that's the case, is going to happen to the dollar and gold and silver in turn. And that's going to be the much bigger game, the much bigger end game than just cryptocurrencies.
Yeah, and certainly you mentioned the inflationary pressures in there. No shortage of that. Again, this week we saw CPI come out a couple days ago. And man, look at this. The wholesale inflation rose 11% in April as producer prices keep accelerating. I notice they've dropped the word transitory from that write-up. And Rafi, would it be correct for folks to look at the wholesale PPI somewhat as a leading indicator, because these are the prices that are going to be passed on to the consumer? So is that a good way of looking at it? And any other thoughts on the inflation numbers we're seeing?
Yeah, you can look at the PPI as a leading indicator, but what I do is I just focus on food prices, because that everything is fudged. Everything is kajiggered with by the statisticians at the Fed and the BLS. We can't stop that. But it's the hardest thing for them to lie about is food itself, because people eat food in pretty much the same amount as they did in the 1970s, 1980s. It doesn't really change that much. And there's some substitutions that you can make, yeah. But if you want to know what the real inflation rate is for the most basic of necessities, which is what happens in an inflationary society, meaning spending, discretionary spending for luxury items goes down, so you can see falling prices for more luxurious items, whereas basic necessities go up and up, because that's where all the remaining purchasing power has to be concentrated. So if we look at the producer prices for food and in the consumer prices for food, that's where we want to focus. And again, looking at Europe, the PPIs there are in the way double digits, saying 30, 40, even 50% in Denmark, maybe 40% in Germany, some crazy numbers like that. So yeah, the euro is becoming unglued.
Yeah, although maybe that's because those parts of the world don't have President Joe Biden coming up with several proposals. I mean, he's spoken multiple times about the raging price increases. And also, just on a side note, it's interesting the language you're seeing used here. It's not like, well, inflation might be high. Raging price increases as a student of NLP and knowing the psychological impact, now you have mainstream people reading about raging price increases, and we'll see at what point they start to check in. But Rafi, what do you think are the chances Biden's plan, without even if you even read this or not, knowing what they are, is there anything you could think of that this man could do to rein in, as wow, look, it's like almost a trademark phrase, the Putin price hike. Do you think Joe has that under control?
Tell you the truth, I wasn't even aware that he was still alive. I don't pay attention to him anymore,
Well,
except for comedy. But no, there's nothing he can do. What could be done is that the Fed could stop printing money, but then all the banks collapse, and then yeah, the prices of everything would really fall to the floor. But then so would everyone's asset prices, and then we'd all have to start over, except for the people with real money. And eventually, that's what's going to happen, except not in the deflationary sense, but in the hyperinflationary sense. But functionally, it's all the same thing. There's nothing he can do, and I think he's the perfect guy to lead this era, because it's a totally brain dead, nutty era, and who better than Joe Biden than to be at the helm of it? Who else do you want? It's perfect.
well, I don't know. I mean, we could have seen if Frank Drebin was available, but the president who spoke from a farm, nice photo op, noted that Russian President Vladimir Putin's attack has driven up global prices of a variety of food staples, including wheat, corn, barley. Um, and again, I'll understand that's a sensitive issue with a lot of different views on what is or isn't happening there, but just to the degree that it is not looking good. And it doesn't appear to me as if there's much of a plan in place. It seems like there's more of a plan in the Russian side in place, where they've been looking to a gold backing and other arrangements. So we'll see how that goes, and whether silver is one of those commodities that might go into any sort of backing, which could be helpful because, as you well know, it has not been the easiest of times for silver investors. Down another dollar almost on Thursday here. Rafi, what would you say to the folks who are invested in silver specifically as a hedge to inflation? Now, here we have the inflation roaring, and so far they're getting beaten up pretty good, which I know doesn't make it an easy environment. So what could you say there?
Look, this is not the first time this has happened. We've seen it twice before. If it's three strikes, you're out. We saw it in 2008. Silver went way down. It slung right back up. It took about 2 to 3 months. I think, or maybe 4 months. It was in the months category in 2008 because things were slower back then, even though they were pretty fast. Happened again in 2020. Then it took about 2 or 3 weeks. Okay, so silver went down to I think around $11. If this is the big liquidity crisis that we've been waiting for, then yeah, so the silver spot price could get hammered. Silver physical prices, no, they're not getting hammered. They're pretty stable. Look at your local retail outlet for coins, and they've gone a little bit down, but they're pretty stable. That's the real price of silver. The rest is speculators being squeezed out. Squeeze them all out, and hold on. This is the third time it's happening, so you can't say it's new.
Yet, in the meantime, that doesn't make for the easiest environment for a lot of the companies that have to go out and mine silver, because at the same time, you have rising costs of just about everything, as evidenced by the CPI and PPI, the price of silver falling. And we did have some news out the last couple days, a few earnings releases. Here's First Majestic Silver reports first quarter financial results, quarterly dividend payment. Equivalent production 7.2 million ounces, 2.6 million ounces of silver, and 59,000 almost of gold. This was interesting. All-in sustaining costs were $20.87 per AG ounce. So that doesn't seem like it's going to incentivize more companies to go dig silver out of the ground. And last I heard, especially all the military applications use a big chunk of silver. So one last note here, declared a cash dividend payment of 0.006 per common share. So I like to think whether the market recognizes the silver price at some point, maybe they'll be paying out larger dividends one day from now when we have something that I would think is more reflective of silver's value. But Rafi, any comments here on First Majestic?
The dividend is a new thing. I think they've only been paying it for 3 quarters or something. So dividends for silver miners are relatively new. Most silver miners don't pay dividends at all. But I do expect this to grow. And some gold miners, I think Hecla is one of them, have created like a gold linked or a silver linked price to to a special dividend. I expect that to happen as well. And in an end game scenario, right, where the dollar can't really buy much, then companies that pay dividends in dollars are it's not going to be worth much, but gold and silver mining companies like First Majestic will be able to pay out in silver certificates, which would still have market value even in the event of a hyperinflationary scenario. So this is why you should own miners, not really to buy low and sell high, but to have a stream of real money for when you would need it for the end game.
Yeah, and Rafi, in terms of the end game, are we looking at, well, my mining stocks went up or the price of my silver went up and then you sell it at some point? Or is it just more a perspective of, hey, rather than needing an ounce of silver to buy this many groceries, now I can use a tenth of an ounce or a half ounce or whatever it ends up being? How are you looking at that?
Well, I try to divide it up. I mean, I have silver coins for emergency if the currency breaks down and you really can't use it to buy anything, so you need something to buy things with, because what else are you going to do? So that's my emergency stock. For gold and silver miners, look, for people who have debts, who want to pay them off in cheap dollars, and you got to sell some silver at a huge profit, you just pay down your nominal debts and get out of it. Do it. But personally, I'm going to hold them through the end game, and my intention is to hopefully glean some gold and silver dividends in that event. And I really I don't know exactly what's going to happen in that scenario, but I do know that gold and silver miners will be very valuable because money is the commodity that will be in the most demand, and they will be the ones that produce it. Just like the Fed produces money now in an inflationary environment, the equivalent of central banks in an endgame environment will be the miners because they will be their own central banks producing money physically.
Well, that makes sense. And we have another earnings out here from Fortuna Silver that you've been covering in your report each week. And Fortuna reports net income of 27 million in the first quarter. Some operational highlights: gold and silver production of 66,800 gold ounces, 1.67 million ounces of silver. And we see here the all-in sustaining cost per silver equivalent ounce of payable silver sold at 15.32 and 17.83 for San Jose and the Coloma mine, respectively. And again, down here, net income of 27 million or 9 cents per share compared to 26.4 million in the similar quarter 2021. So anything in particular that stands out to you on this one, Rafi?
Yeah. So this shows you a good difference between between First Majestic and Fortuna, both good companies, but they have different strengths, different weaknesses. Look, if you want a dividend stock, then First Majestic is your stock because I see that dividend growing. But Fortuna is having an easier time with managing the cost inflation because they're hedged against diesel, so their costs haven't risen as much as First Majestic, which is not hedged against diesel. I checked their at least I didn't see any indication of that. So, then for now, Fortuna isn't paying a dividend. Do they plan to in the future? I think at some point they will. But yeah, there are these different types of mining companies, some for capital growth and some for dividends, and it's a good mix.
Well, that makes sense. And again, certainly mining, not an easy business where things can go wrong. So certainly for folks at home, again, please consult a licensed financial advisor before you're making any decisions. But also, at least one thing worth discussing is diversifying a lot of these projects, because certainly if silver does have a big move, I mean, if it ever got through Rosty's tamp down at the 30 level, you would think there's some good times for the miners. But if there's ever an industry where diversification would be well served, I think silver would be it. And the last one we have here is from BlackRock Silver, commences fully funded Tonopah West resource expansion and step out drilling. As you can see here, commenced a fully funded 10,000 meter drill program on its Tonopah West project. Said with a little bit of a Canadian accent there. So, Rafi, any thoughts on what you've seen from BlackRock Silver?
Well, BlackRock is an explorer, and look, these can be very exciting companies, especially in an environment where we expect a slingshot. And look, at this point right now, with everything crashing, these companies are going to be selling at heavy, heavy discounts, and they are not going to last. As long as these exploration companies are well funded, and BlackRock definitely is, then yeah, they will be starting production. And when they do, I expect silver to be in a much better position, because the discount, once again, is not going to last very long. Certainly, it's not going to last into the point where BlackRock becomes, a mid-tier company. So if you're looking for good explorers, then yeah, BlackRock would be one of them.
Yeah, and it actually reminds me of something that Dave Kranzler mentioned in his report yesterday, where he's talking about how some of the bigger companies, they're getting sold off, but at least they're farther advanced, whereas you go more to the exploration side, and that's where funding really gets smashed when the price gets smashed, which leads to that dynamic. I mean, if we're counting on the explorers to be out there, hopefully finding something to bring more to the market, again, in the grand scheme, perhaps a smaller percentage with a lot of the metal coming from the non-primary silver miners, but all these factors with the price going down, whether it's the margin for a producer, or really selling off some of the shares in the explorers, does not help to bring new supply online. And any thoughts on that?
No, it doesn't. But we've seen a smash of explorers before, at the depth of the 2015 gold and silver bear market. Some of these companies were trading below cash. Uh, they had cash on their portfolio, on their balance sheet. Their stock prices were below the value of their market caps were below cash. We're not there yet. I don't know if we'll get that deep down there, but there, a lot of the good explorers survived the 2015 bear market, and BlackRock will survive this, because we're not in a silver bear market, and we're not going into one. Even if it dips to a crazy level like it did in 2020, it's gonna be a very, very short story. Just like it was back then, it will be this time. There's nothing new under the sun. History repeats itself, and it's repeating itself in faster and faster spirals now. And we're getting to the end of this. It's getting close.
And is that reasonable? At least the way I've approached it is that I feel my expertise is more in understanding what's going on with silver. And I looked for companies where, all right, the management team seems to be seeing the same plan that I am. They have a good track record, and they're funded so they can stay in business. If you have these dips in the price and mix in some diversification, then it makes it a little easier when the price goes lower. If you have cash and you still believe in the long-term thesis, then becomes easier to manage. Again, that's going to be different for everyone, but is that at least a reasonable starting point in thinking about the process and how you want to approach something like this?
Yeah, of course. I mean, look, when they went into the business, we all knew how silver behaved. So if you're going to fund yourself, if you're going to get funding, and the people that are giving you money also know that very temporarily silver can dip in crazy sell-offs. I mean, that's not anything that people haven't seen before. So presumably, if they're getting funded with the assumption that this could happen, and when it does happen, it's very short-lived, and you can survive it, which is why they're being funded in the first place.
Yeah, and last one for you, Rafi. Do you think are we close to something like 2020, where it went to 12, and then a couple months later it was getting right up to that $30 level? I don't know if it was tamped down then, but I mean, you could say in a sense, with how much money has been printed since the COVID era, I know a year ago people were saying, well, 40% of the dollars in existence were printed in the last year. And now in the last 2 years, that number is even bigger. So is $20 silver, $21 silver today you might be able to make the case it's almost as cheap as $12 silver a couple of years ago, which isn't to say that this is the bottom, but in the context of what's happening in the world, are we getting close to the point where this is a similar situation?
In time or in price? In price, it's really hard to know because you have to know where, there could be a whale in the futures market somewhere that has all these contracts that have been accumulating, and nobody really knows. So if they're liquidated for whatever reason, let's say, some crazy example, got some trader or some institution with hundreds of contracts or thousands of contracts of silver betting on it, and they're also betting on Bitcoin because they're also Bitcoin enthusiasts, and all of a sudden they get margin called on Bitcoin. They have to sell their silver futures to fund it. Something like that. There's all these kinds of weird things that could happen that you just don't know. So where the bottom is in terms of dollars, you never know. In terms of time, I think the end is coming this year. I'm seeing, during the seasonal dip of money supply growth, usually happens around August, September. I think there's going to be some kind of monetary catastrophe that happens around there. Am I 100% sure? No, I'm never claiming that. But yeah, I don't think they can survive. I don't think the monetary system can survive this year. And if it does, I'll be ready for that too.
Yeah, and like you said, perhaps best to hedge out as much of that time we're guessing as possible. Again, I say this, my background was trading equity options, which was short term by nature, but part of why I left was seeing, geez, this thing is so rigged. What's the point of sitting there flipping coins in the short term? Not that someone who studies that and has a real expertise there, it can't be done, but um, it just seemed a little bit easier to me to look a little bit further down the horizon. I'm 43 now, and I don't know if I'm planning to retire. If I retired, I'd probably still be making videos wondering what's going to happen with silver. So, at least for someone in my position, what am I going to save? Treasury bonds or dollars while they're juicing up the supply? So, anyway, that's where I've fallen, which could be different for others. But Rafi, I appreciate you sharing your insight here today. And again, every Friday. And perhaps before we wrap up, you can just let folks know where they can find your column that you write every day, which again, I love reading, and perhaps give them how they find that.
You can go to Google or anywhere. It's on Seeking Alpha and type in the Endgame Investor. It'll be the first link. You'll find it, no problem. And it's a daily market commentary coming from an Austrian School of Economics perspective, with a focus on emotional stability as we go through the endgame, which is hard to maintain. And this is one of those times, but we're doing the best that we can.
Well, certainly you make that journey a little bit easier. And perhaps it's a great test in patience, but again, just continuing to learn and hear different perspectives is the way I've approached that, and I think has served me well, and hopefully is the same for everyone watching at home today. So I thank you, Rafi, for being here, and everyone at home for watching. Hope you're having a great morning out there wherever you are, and we will look forward to catching up with you again soon.